Start trading crypto today. Sign up for our step-by-step video series to get set up with the best trading tools, start analyzing charts, enter and exit a trade properly, and most importantly, see if crypto trading is right for you. Join us at bitlabacademy.com.
Welcome to Rice TVX. On today's Rice Report, I am joined by returning guest Lynette Zang, who is the Chief Market Analyst for ITM Trading. She has been on the show a total of 10 previous times. I will include a link in the video description and above for the playlist that I created with all of her previous appearances. Before we get into it, visit ricetvx.com and sign up for my mailing list so you never miss an update or new Rice TVX content. You will also find my various social media links and more. You can also find Rice TVX on Odyssey and Library, where I have a full catalog of my videos, post up extra content, and share other appearances. And you can also find Rice TVX on BitChute. I've partnered up with My Patriot Supply so that you can prepare for these uncertain times. Visit www.prepwithrice.com. I highly recommend My Patriot Supply, America's largest emergency preparedness company. Act quickly and you'll save $150 off their essential 3-month emergency food kit, which contains an abundance of delicious foods that provides more than 2,000 calories a day. This includes free shipping quickly and in unmarked boxes to your doorstep. Visit www.prepwithrice.com as an additional way to support the channel. I will include links in the video description for everything I just mentioned, as well as everything shared on today's video. All right, ladies and gentlemen, joining me on today's show for the 11th time is Miss Lynette Zang. She is the Chief Market Analyst for ITM Trading, and some people know her as DataGirl. I will have a link below in the video description and above for the playlist that I created with all of her previous appearances on the channel, so be sure to check those out. And I also want to apologize to everybody about my voice in advance. I just got home a couple of days ago from Miami and lost my voice just from talking a whole lot. So the Energizer Bunny said she would be doing a lot of talking, which I really appreciate today.
I always do.
And Lynette, welcome back to this channel. I really appreciate you coming on. How are you?
I'm great, Chris. I didn't realize I had been on 11 times because I don't keep count.
Right. Well, and I wanted to, normally I don't, I think it was like the first couple times that I would say what number it was, but I was going back and looking at the playlist. And 3 of those conversations involved Pimpy from Pimpy's Investment Chat.
Mhm.
And if Pimpy is watching this, I've been trying to get in touch with him. So he's more than welcome to reach back out to me. And the next time I have an interview scheduled with you, Lynette, we can do another 3-way conversation between the 3 of us, because I know you enjoy those.
Absolutely.
Well, the last time that we talked was back in end of October of last year. And
oh, wow. Lots happened since then.
So much happens in just 30 days, it appears.
Even a week.
Yeah.
It's true.
So today we're recording this on the 12th of April, and we're going to release it on the 13th, the very next day. But today we also had the CPI inflation data come out, which was a little bit higher than expected at 8.5%, which I still think is low. I don't know if you want to start off with that, but there's so much that's been going on with like Russia, Ukraine, with what Russia's doing now with the petro ruble.
Yes.
The
And
LIBOR you've discussed.
Under the gold price.
Right, exactly.
Yeah.
The food shortages that is being discussed, the CBDCs and digital IDs, the Federal Reserve and their tapering, and everything else that's going on. So where would you like to start as the expert who analyzes this data, who's been in these markets since 1987 in some form, whether banking, stock marketing, or whether it's studying not cryptocurrencies, but world currencies? I got to correct myself on that one.
Yeah. And I'll also correct you a little bit. I've actually been in these markets on some level since 1964. I've been studying currency life cycles since 1987 when I was a stockbroker at Shearson. So,
Okay.
yeah, I've been doing this for a very long time. And, we can start with the CPI. I mean, frankly, they're all related anyway, aren't they?
Yeah, exactly. 100%.
Right. And much as everybody used to like to say, and they still kind of allude to, meaning the central bankers kind of allude to inflation being transitory, even though they've taken that specific word out. How many times do you hear, but it's going to start going back to the 2% the end of this year, the second half of this year. Although they don't say why they think that it's going to go back there. So
Right.
we're just supposed to trust them and take their word for it. And by the way, I'd also like to point out that it's been a big shocker that inflation, I don't care where you're looking at anywhere in the world, it's been a pretty big shocker that every time the data comes out, it was above economists' estimate, and they were surprised by this data. And I don't know why they'd be surprised either.
Right. No, I agree 100%. I don't know if it's just for sensationalism for the news or why they're doing it.
Well, I mean, here's really what's happened is that the consumers are really starting to notice because 8.5%, well, that's kind of homogenized. There was a report because they had to do a study. If you're a central banker, you certainly don't know how the normal person lives. But shocker, 77% of the average person's income goes to essentials, food, energy, shelter. Shocker.
Which are all in your motto too.
Exactly. Food, water, energy, security, barterability, wealth preservation, community, and shelter. Yes, exactly. And so, I mean, I'm putting my neck out on the line, but I really do think that number one, I think this inflation is here to stay, and I think that we're at the early phases of the hyperinflation, because what will bring about the rampant inflation, the hyperinflation, is the loss of confidence. And consumers are starting to question the whole relationship with money, with their pay. Great, they've had all of these great salary gains, but officially, the average wage with all of those salary gains, when you take into consideration the cost of living, has declined 2.7%, their income, or their standard of living,
Yeah.
their income, right?
That's
Because the inflation is running so much hotter. And
that was the exact words that were used in a lot of the articles, that it came in hotter than expected. Not higher than expected, but hotter than expected.
right.
Which I
So
thought
yeah,
was an
there you go.
interesting way of putting it. And I was also checking out your Twitter account where you were sharing this particular article from the Wall Street Journal. And I believe you also shared this article about inflation is
Yep,
recasting Americans' relationship with money, each other, which I found to be really fascinating, about how people are planning on cutting back their spending and their
exactly.
habits.
Yeah, I mean, big, huge changes. I mean, before the Cerveza issue hit, they were actually building apartments without kitchens because who wants to cook? You just go out to eat, right? But now, I don't think it's it's in this article. If you scroll down a little bit, you can see the chart that they have in there showing that 84% of Americans are expecting to spend less on eating out. So I hope there's none of these people that don't have a kitchen, they can't cook. It's kind of like an issue. But I think it's going to get much, 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 much worse. I mean, I'm really convinced of it because the only thing that holds it even somewhat together is public confidence. that the central banks can control the inflation that they created, even though they never admit that they created it. And I mean, no, it wasn't from all of this. No, that has nothing to do with all of the inflation. Oh, wait, let's do a little bit more because that has nothing to do with inflation.
Right? I got mine. I got me one, but I don't have dollar bills in it. But I got me one.
What do you have in it?
Yeah, no, it's getting crazy what they're doing. And now I would agree with your point of view and your perspective on things because you've been looking at this from a realistic point of view. You don't have an agenda like a lot of the people from the legacy system and the financial markets do to try to keep that confidence with people.
Right. But I want them to open their eyes because how many times can you be lied to when you do not know the truth? And how can you make educated choices when you don't know the truth? So people get married, you know, I mean, it's like that nominal confusion and numbers just blind them. Oh, look at all this money I'm making, except that they can't keep the roost up forever because it is a con game.
No, I agree 100%. Now, I mean, do you think that they could, because we obviously know that other nations are utilizing CBDCs. China, Russia's working on it. And the last time we talked, I was definitely wrong. The Fed coin is a CBDC. So I was definitely wrong on that. I was thinking they were two separate entities. There was going to be something else issued more from an IMF standpoint. But just relating to it, you were correct. Now, the U.S. is talking about this. And one of the things in Biden's executive order that was really just kind of a precursor was being competitive globally. And that means they don't want to fall behind, especially with nations like China already kind of forerunning it. Right. So pushing into a digital element, do you think that will allow them to keep this game going longer and be able to control the inflation a little bit more than they would the way it is currently?
You know, I think that, you know, here's the thing. What I don't know is whether or not we actually have a digital dollar or a Fed CBDC finished yet. They're saying no, but there are too many things that that are supposed to happen in 2023. So I don't, you know, obviously I can't prove it. So, but I think that they are probably already, I think they already have one. They're just not ready to unveil it and they don't want the public to know about it. But I could be wrong about that. That is not something that I have the ability to prove. It's more of a, yeah, when they're talking like you're saying, they don't want to fall behind. China's been testing theirs and getting the public to adopt it for a while now. And so have other countries, but China would be the one that would, in my opinion, would be the most significant. So, yeah. And will that tame inflation? No. I mean, right now, when you're seeing people having to make choices on whether they put food on the table or gas in the car, and we are a consumer driven economy, you have to consume. All I keep hearing about is all the money that's yet to be spent from the stimulus. So the assumption is, I mean, it worked for a while. When the masses were given lots of money, they didn't give a crap about the inflation and the price increases because they had a lot of free money that they got to just spend. And you can look at the savings rate that went up like that, like up 30% or whatever it was, and is now back down to where it was pre-pandemic levels, right? But they still have a little bit of cash set aside. But if they're concerned about inflation and their ability to feed their family and keep a roof over their heads, then they're not as likely to just go out and be frivolous with that money. So mainstream media is saying, well, the way to protect yourself from inflation is to buy those stocks that have pricing power that people are going to have to buy no matter how much it costs. But here's the big problem with that. A trillion times zero is zero. And so I'm sorry, Chris, I'm sorry about this. But that's true with cryptocurrencies too.
No, I mean, I agree with where your viewpoints on a lot of these things.
Right.
I
And
mean, if we
let me say, I can say, I didn't mean to interrupt you, but
no,
I
no
do
problem.
want to say that I can see the benefits on some levels of the blockchain, of the technology, the underlying technology. There's a lot of good things. But I think that the cryptocurrencies themselves, I mean, when I'm watching Bloomberg or CNBC, they look like a trading tool to me.
That's how it's definitely been acting. I mean, now the unfortunate thing with Bitcoin in particular, Lynette, is when it was created, it was supposed to be created as a peer-to-peer cash system, and the powers that be and the media, the crypto media, kind of made it into a digital store of wealth. And then you have Gresham's law come in, and people want to use the scarcity factor and want to hold it, and that's where the whole digital gold thing and come into play. But the idea of what that decentralized peer-to-peer cash system represents, I think, is a very powerful thing. And and the way technology advances, I think that we're still kind of far away from a be-all end-all solution. But a
I
lot of these
agree.
things could lead up to that. And if you look at what took place in Canada with the Freedom Convoy and freezing people's bank accounts,
Oh, yeah.
they couldn't do that with non-custodial cryptocurrency wallets. They could only do that with centralized entities that they were dealing with, which were all tied back to the legacy system. So
Well, see, and then that's a good advantage to it. And we've also seen some benefits in Ukraine for the same
right.
reason. So
So there's
there are definitely
dualities,
benefits. There are.
and that's where there and there's dualities and everything. Because even with gold, I mean, we
With
can't
gold,
carry around all that gold on our back. If you had to leave your location with all of your gold, it would be a big hindrance for you. So I mean,
which
there's always a pro and a con and a duality and everything. I know you'd make
it's
it
a
work
fact.
though. I know
Oh,
you'd
I
make it
would
work.
figure it out. Let me tell you. I have 2 big dogs. No, and now I have 3 big dogs. One's at doggy boot camp. Yeah, I put packs on them and off we go.
Well, where do you think that? I mean, where is all this heading? And with what's going on in Russia and Ukraine, the price of crude oil, the price of energy, the discussion of food shortages. I
We're
mean,
going into a hyperinflationary depression, Chris. I mean, I really hate to say it, but and I can't even it kind of sounds I know this sounds weird, but they're taking us they meaning the powers that be are taking us from crisis to crisis to crisis to crisis so that we feel off balance, right? And we're looking over here, we're looking over here, we're looking over here, and we're not watching the complete social, economic, and financial transition that they're making. And I was there in 1971, and I didn't realize what a huge change had occurred. And I know my parents didn't realize it, or even my Uncle Al and
I
Aunt
don't think
Bertie.
many people really fully realized it.
No, and they're doing the same thing. And so when you read their documents, what they say is we know how to do this. We just have to keep things as normal as possible. And, I always go back to that 1996 NSA white paper on how to create a mint.
Yeah.
You're talking about developing the cryptocurrencies. So I know it'd be nice to think that somebody somewhere did it, but I personally think it was the government that did it.
And that's very well possible too. I mean, but at the same time, it is open source technology and people
There
can
are
take
good
the
things
code
for it.
and they can and other good individuals or other entities can take that code and improve upon it, because some of these privacy coins, they're not like the centralized exchanges won't touch them. The governments really don't like them. So in that aspect, I mean, having that privacy, which is what most people would want when it comes to
Right,
their finances,
right.
that would give you that. So again, I agree with you completely about the dualities of it all. Now, when you mention hyperinflation, for the United States in particular, are you talking about on the levels of what we've seen in Zimbabwe or Venezuela coming here to the United States?
Yeah, I am. Because we have to burn off that debt. And I am not a cryptocurrency expert. I'm not an engineer. You understand it far better than I do because that's where you spend your time. But I am an expert on currency life cycle issues and how they make that transition. That I am an expert on because I've been
Right.
studying it since 1987. And there are always these repeatable patterns. And I mean, it's heartbreaking, but that's what I see because we have to burn off all this debt. There's too much debt. There's too much leverage in the whole system because that's what creates the money in the system. It's
Well,
that debt and leverage.
what about a potential? I mean, we know that we're at the end of a fiat cycle, which means that there has to be a new fiat cycle to start, which means we would be dealing with a new system.
Yep.
So why not have a parallel system happen at the same time as a crash so that you could alleviate and reset? Like they are
Well,
talking about a
alleviate
great
what?
reset. Just
Yes.
alleviate what's like taking the pressure off of where it's at, like taking the money and just transferring it from one system to another and resetting everything and forgiving debt. What
Well,
would
but Chris, here's the problem with that. The money is the debt. And the new system is also, so far, what I can see is the new system is also based on the debt. So you have debt that is at nosebleed levels. In order to go into the new system, you have to get rid of that debt. Well, what are you going to do? Just forgive all of that debt? Everybody'd have to agree. And that's never historically ever happened. So could this time be different? Well, who knows? These are not things that are within my control.
right?
History, even now, you read the documentation from the IMF, and they're talking about how to restructure, the all of this debt from emerging countries. How to restructure it, which means somebody's going to take a haircut. And that's the thing. It's not painless. Somebody's going to take a haircut. And the worst of it, really, and the reason why they can't do it is because of all of those leveraged bets that were put on top of all of this debt.
But once we hit this hyperinflation, won't all that just crash and just tumble?
Yeah, the whole thing will crash. The whole thing will crash. Yes, it
That's what I'm
will.
saying. How can we pay off the debt if we've hit a
We
point of
can't.
hyperinflation?
Well, you pay it off in theory. You pay it off with dollars or euros or yen, whatever, that have absolutely no value.
Right, the monopoly game.
Right. Which, by the way, is a key, since that's what the governments are doing. And since it makes sense to me to do whatever the smartest guys in the room are doing for themselves, right? That's part of the strategy that we execute at ITM. Is to you repay this debt that you have fixed rate. If you have variable rate debt, I'm telling you right now, get rid of it now. Now is the time to get rid of it. But that's why it isn't smooth, because everything is counterparty risk. So somebody is going to get burned. Somebody is going to get burned. And mostly, by a wide margin, since all of these, the whole world, the whole physical world, not the whole world, but pretty darn close, these tangible assets, real estate, gold, everything has been turned into a financial product.
Right.
So when these corporations have taken on all this debt to build all of these high rises that here in Phoenix we see going up like crazy, all of that debt has been turned into a financial product and sold back to you and put in your retirement plans, whether it's your pension plan, your 401k plan, and even as the Federal Reserve is now going to, we'll see, roll off their balance sheet, right? There's about what, 3 trillion in debt that's coming up, because they're talking about alleviating almost $1 trillion worth of debt between treasuries and mortgage-backed securities a month.
And what would
That
happen?
happen.
What would really happen if they actually did that?
Interest rates will spike even more. That's why you see interest rates spiking the way that they have, but
Right.
they would spike even more. And with all of that debt, not all of it, but a lot of it being short term, you got to roll it over. And these corporations couldn't afford it at these higher levels. We'll have a lot more zombie corporations. And the only reason why we have zombie corporations right now is because the banks don't want to take the write-offs because it'll make things look different. And a zombie corporation can't even pay the interest on the debt that they've accumulated, let alone any of the principal, for at least 3 years. They have not been able to do it for at least 3 years. So you're going to see a lot more of that, but how much of that can the banks eat? I don't know.
I mean, I keep seeing so much happen. I keep thinking it's like we're so close, we're so close, we're so close, and it just keeps getting extended and extended. And it's like, how long can this thing be drawn out?
As long as the public has confidence in these guys, in the central banks, in Jay Powell, in government officials. That's how long this is a con game. Con games can go on as long as there is confidence in the system. But the confidence then this is the problem with inflation for those that are in power. The hotter that inflation runs, the more noticeable it becomes, the less confidence that the public has in the Fed's ability to control this inflation that they created.
Yeah.
And that's why they always gauge inflation expectations. Because when you think you're going into higher inflation, you behave differently than if you think that there is no inflation, which is a lie anyway, or even at 2% inflation. You know, if you stop and think about it, if it really is even 2% inflation, then they're robbing you of 2% of your wealth every single year, and you're going like, okay, here it is, here it
Yeah.
is.
Like it's
Or
okay.
or you're taking risks to try and outrun, and you'll never be able to outrun it, really. I mean, unless you have something that's undervalued.
Right. No, I agree. I agree 100%. It's crazy where we are right now and just paying attention to what's happening. When you talk
Yeah.
about a new system, do you have any idea of where that begins, where that starts? Is there information out there? I've been looking into ISO 2022. I don't know if you've looked into this. It's a
Yeah, I
replacement for
mean,
Swift,
well,
or it's a not for Swift because it is Swift doing it,
right, exactly.
but
But
an
I think
upgrade,
that
I guess. I'm not
what would
sure how
be an
what you would really,
upgrade? Who's
not
gonna
really.
control it? I mean, they kinda shot that big bazooka with Russia and really showed the whole world that they can't be counting on the US and the payment system. So it's much bigger than that because you'd have to get everybody to agree, and I'm not really sure that that is indeed, and that's certainly not going to save us.
Right.
I mean, look, what saves you? You know, I mean, we've all lived a life. I'm 67. I can't sit here and say that I've always made the best fiscal choices in my life. But I can tell you this, when I have extended my ability to make payments more than I could, in other words, when I've taken on more debt than I really could handle, or even if I could handle it and then something happened and I couldn't handle it, if I did not have the savings to back me, I had a crash and burn. And I've had crash and burns in my life, and I'm sure a lot of your viewers have had crash and burns.
Yeah.
But when I have savings, bring it.
No, yeah, you definitely have been smart about what you've been doing, and that's one of the things that I appreciate about being able to have these kind of conversations with you. And I really, thank you for being someone who likes to translate that financial noise, that jargon that is meant to be boring and not really understood by the general public, and make it into an understandable language.
Thank you. Well, it's what I was put on this planet to do, Chris. So thank you very much for appreciating that. I appreciate that.
So, when we talk about the inflation numbers and CPI, as reported today, it's 8.5%, which is hotter than expected, and that's the highest since 1981.
Mm-hmm.
And I've heard the same thing, that this is going to be the peak of the inflation, and the rest of the year is going to be tapering down. But obviously, I've been hearing that these numbers are even more manipulated, and they're not even really true and correct to really what the inflation numbers are. Do you have a general idea of where we are with the inflation numbers versus what's being reported?
Well, if you've got, in my opinion, we're probably closer to about 16%. But, it's pretty easy to manipulate the data when you're a government agent because, hey, if there was steak in the basket, once steak got too expensive, they put hamburger in the basket. Once hamburger got too expensive, they put hot dogs in the basket. Now maybe they're putting Beyond Meat hot dogs in the basket. I don't know. But and also the categories. If you read the release or the discussion that one of the Fed presidents, Lael Brainerd, said just the other day, that part of the problem with the data is that there can be a real variety inside of the category. And she used the example of a can of tuna versus a can of caviar. And what has more demand and so has escalated in price faster? And then that's what's in that 8.5%, right? So the caviar does not move as quickly as a can of tuna, right?
Right.
So no, it's probably closer to 16%. I mean, when you're looking at rent, that's at like what, 20, 23%? When you're looking at
Easily. And that
food,
depends what
it's like 40 or 50%.
it depends on a region, because rent and stuff, like areas like in Florida, like it's going even double that because of the demand of people not only moving down, but realty companies buying up property, New York companies buying up property, Chinese companies buying up property.
Yes, exactly.
Even
And
at and
they don't care if you're sleeping
outbidding,
on the street.
right? They're outbidding people, because I know that when you take a loan out to buy a house, there's no money involved. It's just a creation of digits behind the screen. So there's no sweat off the banks, to buy something overpriced, to outbid the everyday person.
Well, where are they getting that money from? Wall Street.
Right. Which is
And then
being
what do they
inflated.
Exactly. They don't care how much it is. And then what do? Then they take whatever, they'll put debt on the property, and then they'll take that debt and they'll turn it into a financial product. They'll sell it back to you. So when everything goes south, it's the little guy that eats it in the shorts. That's who always eats it in the shorts.
So as the US dollar is having the status of world reserve currency, um, it seems like we're on the brink of losing that status. Would you agree?
Oh, 100%. And I would actually say that it was December in 2002, which was the first time, at least that it was recorded, that the Federal Reserve started buying the government debt. So we've been on the verge of losing that. And then added to that, now the US dollar still at this point has the largest share in world trade, except that that's been declining pretty significantly over time. So yeah, I would 100% say that the US dollar has been losing its status, has actually lost its status as the world reserve currency, because we have other reserve currencies in there. And then when you look at the fact that, look, creating an alternative to the US SWIFT system, thank you. But China and Russia already did that. What, 2000, was it 2018 or something like that?
I believe so, yeah.
And India,
The BRICS nation banks, right?
exactly. So there's already been a transition away from the dollar. And I think that what just happened on the global stage kind of was the final nail in the coffin, because you have to have confidence. It's a con game. You have to have confidence.
Right. The rest of the world has definitely lost confidence.
Yep.
And especially the BRICS nation banks, which were like had that whole de-dollarization strategy. I think it was 2018 that China launched the petro yuan.
Yep.
And then just recently with Russia.
Exactly.
Which that was unheard of prior to China and Russia, because every time a nation would try, normally we would come in with guns.
Well, we would annihilate them, but they were smaller, weren't they?
Yeah. Yeah, but Russia and China aren't as small as some of those other nations. So now we're seeing a little bit of a shift. Do you think that that we will have a replacement, like publicly come out like an SDR with a basket of cryptocurrency or currencies? I don't know why I want to keep saying cryptocurrencies every time I say currencies.
That's okay. But the answer is yes. I do think that the SDR is the most logical. It's been around since 1969. It has been integrated throughout the global financial system since then. It was kind of just snoozing until 2009. Then they ran a test. And then recently they did a massive, massive injection of SDRs into, well, for all of their members. So they can create that money out of thin air, but it is a basket of currencies. There are no limitations as to how many currencies can go inside of that basket. So that to me is the most logical next step, because they don't have to reinvent the wheel. They already have it. They've tested it. They have maybe improved it or made it more powerful. So yes, that seems to me to be the most logical, the world reserve
Right.
currency.
It does make sense, because I don't think a lot of nations are ready to accept like a Chinese yuan as a world reserve currency yet. I don't think we're in that position quite.
And why would you
Or any
want
nation
to?
at that point, at any
Right.
nation at that point. So
Right.
that's where the SDR, the special drawing rights, and it was technically the first digital currency created in 1969.
Yep.
So
Absolutely.
that's a pretty interesting fact. Now,
There is something else though, Chris, too, that one of the consultants at ITM sent me this morning. So I hadn't seen it, but it's always helpful when people send me things because I can't see everything. But there is now a credit card. And remember, I think we talked about the goal being to hold title on tokens. And then these tokens and all your equity can be broken down into itty bitty pieces. So now you're holding your equity on your phone and you're going and you're shopping with it. There is now a credit card that has come out that is backed by the equity in your house. So I'm going to look into it more, but my presumption is that as long as you pay your bill, you're fine. But if you don't pay your bill, then you have agreed for them to go and pull equity out of your house to settle your bill.
interesting.
Oh, very interesting. And the first step toward, that if that gets normalized, I mean, why would anybody do that? You're insane.
Yeah, because I mean, you could essentially lose your property.
For
Right.
a credit card bill.
Right, especially if we're seeing hyperinflation coming, and we're talking about like Zimbabwe and Venezuela kind of numbers, and then if people aren't really even fully understanding what I'm saying about those two particular nations and the hyperinflation, go on YouTube and just search Zimbabwe hyperinflation, Venezuela hyperinflation. Something you can also search for, they call it the Maduro diet in Venezuela, because their president basically starved people.
Well, and that's what we're talking about, and that's what we're seeing. So there's definitely a global food shortage. You've got Russia and Ukraine, which is basically the wheat and fertilizer producers. So the farmers aren't getting the fertilizer. Now, in my personal system, I have all these ponds on my property with fish and I have chickens. And so I create my own fertilizer. So I don't have to worry about it because I don't use chemicals anyway. Seriously, you're smiling, but
No, I know,
you
but you're so smart. You've been so forward thinking. I mean, that's one of the things I appreciate about what you do and what you share, because it goes beyond gold and silver. I was going to talk about your new
yes,
YouTube
it
channel, but
does.
it really does.
Yeah, it really does.
I did want to ask you about that towards the end, here in a few minutes, when we get to the last few questions. Um, what are you really wanting people to pay attention to the most right now that's going on and on the short term? And what are your recommendations for people on the short term with that?
What I really want people to pay attention the most is how you can create community where you are, because we're all going to have to be making a last stand. And I don't think that's very far down the road. I would be surprised if we weren't in major hyperinflation toward maybe 2024. And I think we're going to have another major crisis. We're going to be lurching from crisis to crisis. And I want you to realize that that is part of the normal pattern to keep you off balance. And what I want people to do about it is to get prepared. Food, water, energy, security, barterability, wealth preservation, community, and shelter. Get it done because people procrastinate. I'm so grateful for what happened in March and April of 2020 because it showed me the holes in my personal strategy. And I had the time to go in, and I'm not completely finished yet, but I'm way far ahead to plug those holes. And I think if every single one of us sat back and thought about, what we didn't have, what we wished that we had during that period of time, and then get it done. Stop waiting. People always think, well, I'll do it like a second before you lose all choice. Well, good luck with that because I pay attention all the time. So do you, Chris.
Yeah.
I did not know 1 second before September of 2008 when Lehman was going out. And I was paying close attention because that's my alma mater, right?
Hmm.
Hard to believe. So that's really, I want them to pay attention. Things are falling apart and they're falling apart very, very rapidly. Can they make this, can they extend it? I don't know. They can until they can't.
You're thinking it could go on until early 2024. So, I mean, we're still talking about another year and 6 months,
No,
year and 8 months.
no, actually, what I said was I think we'll be full blown into the hyperinflation by then.
Okay.
And that's by then. Because 2023, we shift. LIBOR is, I don't know if they're going to extend it again. They've already done this, but LIBOR is supposed to go away. SOFR is supposed to take its place. And LIBOR is the interest rate benchmark. That is a stated benchmark. SOFR is the US benchmark that they created that's supposed to be market based, except they eliminate a lot of the bonds that aren't in there. So it doesn't really reflect what's happening. And you have over 610 trillion in notional value derivatives and contracts that have to be restructured against this new benchmark. When they ran that $80 trillion test, because it was supposed to happen in 2021, when they
Right.
ran it in October of 2020, it was a big fat fail. So I think that's going to be, so we're going to have a bunch of crises because we have to be so freaked out that we will accept anything that they want to cram down our throats. Get in a position where you don't have to accept what they want, because it will not be in your best interest.
No, it definitely will not. But when you said that the LIBOR would be replaced with silver taking its place, what do you mean
SOFR,
by
SOFR,
SOFR? Okay, I thought you were
SOFR,
saying silver.
silver. Oh, I wish.
Yeah, that's why it
That
kind of caught
wouldn't
my
be
ear.
bad.
Right,
Yeah. No, SOFR is the Federal Reserve created a new interest rate benchmark to take LIBOR's position. And I mean, the Bank of England has one, the Bank of Switzerland has one. So there are maybe 4 or 5 new benchmarks out, but the whole world couldn't agree like they were able to agree on LIBOR. But LIBOR, gosh, once we discovered it leaked, that it was being manipulated, shocker, then they had to create a replacement, but it's not a good replacement. And
right.
they've had lots of time to get it adopted, but the markets have not wanted to adopt it because it's not a good replacement.
Which makes sense now. I mean, but considering what's taking place over in Europe with Russia and Ukraine and how that could escalate into a bigger situation, do you foresee that situation making the Fed or giving a reason for the Federal Reserve to not continue to raise interest rates and not continue tapering back and to push the LIBOR date off even further?
Well, on the
Because
first
because
two,
we're in the middle of, potential War 3.
well, for one thing, I think we are in World War III.
Yeah, I would
But
agree.
they may, yeah, I mean, they may use it as an excuse, just like they use everything else and then point their fingers. But I think I think what's really going to have them turn around, lower interest rates back down, and crank on the printing presses again is going to be what's happening in the stock, bond, real estate markets. Just like
Okay.
that's been the trigger right along. That'll be the real trigger, because when those things implode, people notice. When inflation explodes, people notice. They want people to notice the market going up so that they stay in this funny money that really has no value, right? They don't
Right.
really want you to know the truth. That's why they suppress the price of gold and silver, because a rising gold price is an indication of a failing currency. Gold is the primary currency metal, silver is the secondary currency metal. Do they want you to know that this is what you should be holding to protect you?
Not at all. Not at all. I mean, and we could get to that point where we had talked about in previous conversations about another confiscation of gold.
That's a possibility. Sure. I mean, there's lots of historic precedents, even recent precedents in other countries.
Right.
That's why I personally do not buy bullion gold, because that's easy to manipulate, since at least at this point, premiums will change based on supply and demand, but the price is basically at this point manipulated by the spot market, which is cheap. You can create as much gold that does not, and silver too, that does not nor ever will exist as you want, and make it look like there's so much of it out there. But in anything physical, there's a finite amount.
Right.
There's only so many trees on the planet. There's only so much gold. There's only so much silver. And they've never really been able to figure out how to duplicate that in a lab.
True.
And it's used across the entire global world,
Right. No, I
every
agree.
single area.
Now, one last real question, and I want to get into the new channel and what you guys are doing in ITM Trading.
Mhm,
I know that you are friends with Gregory Manarino, and I watch a lot of
mhm.
his content, and I look up to a lot of what he says as well. But again, I mean,
Yes, I know.
I don't take everybody 100% for everything they say, but I try to
You
incorporate a
shouldn't.
lot from everyone. But I do value a lot of what Gregory Mannarino has to say. And he says to pay attention to the debt market. He's constantly saying, until you see a decline in the debt market or we see an issue in the debt market, don't worry about anything that's happening. Can you explain and translate that to somebody who doesn't understand what specifically to be looking for in the debt markets?
Well, look for what we're seeing. But the reason why he said that is because the debt market, so that those are bonds. Let me translate this. Bonds, bills, notes, that's all debt. And once Paul Volcker ratcheted intraday overnight interest rates up to 21.5, what he really did was he bought ramp room. So every time we go into a crisis or a recession, then on average, they would drop interest rates like 5.5%, 5.75%. And then that would encourage people to borrow and spend. So as long as interest rates continued down, then he's right. They could manipulate the markets and stimulate. But what happens, and what he's also talking about, let's say this is interest rates and this is the principal of the bond, bill, or note. Okay. When interest rates go up, you can see what happens to the principal, goes down. The bond is the furthest to mature, and then a note is about here and a bill is about here. So you can see as interest rates move up and down, what moves the most are the long rates, right? So what he's basically saying is that as long as, and he could correct me, so Gregory Mannarino, if you're listening to this, I love you. So if I'm wrong, say it, it's fine. But I believe that what he's trying to say in that is as long as there was ability to lower interest rates and keep them low, then we could continue to grow debt, therefore create money and have things look like it was okay. Even though every time that happened, the value of the money out there was less and less. People don't understand that. So the markets, et cetera, were probably in a more secure position. But we have been anchored at zero since 2008. And so how can you lower interest rates 5.5%, 5.75% to stimulate? You can't. You're now in negative rates, which they tested, which didn't work either.
Right.
So what you're looking at now are interest rates going up and going up very dramatically. And you had an interest rate, a yield curve inversion, which they like to say, see, that's over already, but it really isn't. I started talking about that actually in January when I saw that the 20-year yield, so what they pay you to loan them money for 20 years, was more than what they would pay you to loan them money for 30 years. So that was the first inversion. And then it usually does start out at the end and then it works its way down to the shorter end. So right now, I mean, it kind of flip-flops on a day-to-day basis, but if you look at the charts on interest rates, long, short, in between, they're all going up. They're all going up in a pervasive way. So that means that debt bubble is in the process of popping.
Okay, now one, if Gregory Mannarino is watching this and listening, I have been wanting to do an interview with him. So hit me up, let me know how we can make that happen, Gregory Mannarino. And two, we had an inverted yield curve in 2019, right?
Yep.
So what was the difference between the inverted yield curve in 2019 and what we experienced just recently in 2022?
Well, did we not go into a recession about 18 months after that? It was almost to the day. Now,
That
it only lasted about a minute.
Right. Well, that's also the same time period to the announcement of, our cerveza sickness too.
Exactly. And that's how they got out of that, was just like it made what they did in 2008 look like chump change, really.
So we did experience the recession from the
Sure.
first inversion. Okay.
Oh, sure. Every single, it's happened every single time.
100%.
Every single time.
It's never been
100%.
wrong. Unfortunately, it's never been
The New
wrong.
York Fed, same thing. So, but this time, what's different is that they really are out of tools. And
Yeah.
they have to raise rates to maintain their credibility, or to try to maintain their credibility, because a lot of people, they're not credible
Right. But
to
25
anymore.
basis points is incredible. It's just trying to maintain some sort of like, well, we're still trying here.
Yeah. And even when they're talking about, even if they raise it for the next 7 times, 0.5% each time to fight the inflation that they created, the reality is it has to be ratcheted up above where that true inflation level is, or you're still essentially in negative real yields. In other words, if you buy a bond for income and it pays you 5%, but inflation is 10%, you're really negative 5%.
Right. You're losing money.
Thank you.
Yeah. No, it's completely insane. All right.
Oh,
So
it's completely insane. Yes.
I really appreciate your time explaining all that, and you giving me your insight and your knowledge when it comes to these subjects. So I do want to kind of get a little bit of I want to end off with what you guys do with ITM trading, but I noticed that you launched a second channel, and you also
Yes.
have not only a second channel, but you have a website for that second channel as well that people can check out, and that is Beyond Gold and Silver. So do you want to talk a little bit about where that came about and
Well,
what people can expect to find by subscribing over to the new channel?
that's excellent. You know, at ITM Trading, I mean, really, I've been studying currency life cycles since 1987, and there are repeatable patterns. And from that, I developed my personal mantra so that I was prepared to be as independent and self-sufficient as possible. And you can buy food with gold, presuming it's available, right? But you can't eat gold. And so the new site is to broaden the base of offerings so that people can get as prepared as possible with all of those different pieces. And our goal is to build the most comprehensive library possible so that whatever level you're at, you know, if you live in an apartment and you don't have a balcony even, how can you create food security? Make sure that you always have food. How can you make sure that you always have energy? All those pieces, and we're doing it based upon all different levels of available funds to work with, space to work with, everything. So that's what that site is all about, and it is a free site, and the goal really is to help people get prepared because, I mean, as we've seen, as we've experienced, you know, we need to be as independent and self-sufficient as possible, period.
I couldn't agree more. And what I really liked was you started your Instagram channel and your Instagram account, and you started really sharing a lot more about kind of your mantra, everything that goes into your motto and everything that you talk about.
Mhm.
And I was really glad to see you guys expand out with ITM trading with this and going with Beyond Gold and Silver and making videos as opposed to just pictures and a few little clips.
Right, we're
Because,
working on it hard.
well, I mean, just knowing you over the past few years, I know how important this is to you. I mean, the gold
Yeah.
and silver stuff, it's like you've got down. That's second nature to you. It's not really, you've got your plan set, you've got everything going. I know a lot of your focus is on this area of your life,
Oh, sure.
where it comes into play with the food, the water, the shelter, the energy, the security, the barterability, the wealth preservation, the community.
Yep.
And a lot of that came out during 2020 when we experienced the toilet paper shortage and people having all the issues and you being forward thinking and helping out neighbors.
Absolutely. I mean, I had people that were freaked out. I mean, seriously, like in tears because they couldn't get toilet paper. I said, calm down. I have plenty. I'm happy to give it to you.
And
You
that
know,
shows community, how important community is.
oh,
Of all the things, I mean, money, value, and things like that. I mean, it doesn't change your life. The things that make your life more valuable to me is like really the relationships that you have with other human beings, other
yes,
people. And
yes,
for us to survive, if you look through history, we've been very tribal people. So it's time to kind of come together in our tribes and be looking out for one another, because trying to do this as a lone ranger, as a lone wolf, is not going to be
it doesn't work.
as productive as working in a group where you have everybody looking out for the best interest for one another in a loving way, not a communist kind of way, but just treating people how you want to be treated kind of mentality.
And part of it is, really in 2008, I 100% knew that the system died. And that's really, I was living in a little two-bedroom condo getting ready to retire. And when 2008 hit, I knew, oh, there went all those plans. And I bought this property, which is only half an acre, but it was a house that was big enough that if my kids needed to come, I had enough space and room for them. And then I started on the gardens. I had the food and this, I mean, I had the gold and the silver. That was the first thing that I got covered. But I've been actually working on that mantra. I'd look at and say, okay, where do I feel vulnerable, most vulnerable? And then I would do something in that area. And that's the way I've really built this, so that by the time 2020 hit, I was in a really good position to help my neighbors. And when you come together in community, what you really have is a bunch of people that have different talents and different things, so that one person, you can't do everything. One person
No.
cannot do everything. But I might have a talent that you lack. You're going to have a talent that I lack. And when we come together, there's no lack.
Teamwork makes the dream work.
Exactly. Exactly.
As cheesy as it sounds, it's so true.
It really is.
So I definitely encourage people to check out the new channel Beyond Gold and Silver. And then if people are interested in investing in things like gold and silver, and I really shouldn't say invest, because it's more of a
It's,
life jacket. It's
yeah,
a
exactly.
preserver. It preserves what you have, because the system is designed to take from what you have, is the
Exactly.
best way to put it. So if you're interested in utilizing ITM trading and taking advantage of Lynette Zang's awesome plans that she's been utilizing for years, do you want to kind of explain what you guys do at ITM trading and offer to individuals?
Well, I started studying the currency life cycle, like I said, in 1987, and I've been watching all of these patterns, and in my studies too, these same patterns occur every single time. And so I put together a strategy for myself before I went to ITM trading, um, based on those repeatable patterns. So I can't guarantee tomorrow, but I really do believe that if something's happened the same way 100% of the time and we're doing the same thing, we're most likely to get the same results. And so, what I wanted to do and what we do at ITM Trading is we help you create your own personal plan, which the foundation of it's going to be exactly the same as mine, but then it's customized and tweaked because everybody has, different goals. And that's where it starts. It starts with your goals. What are you trying to accomplish? And they have different means and they have different circumstances and things like that. So it's basically the plan that I'm executing for myself, but tweaked for each individual, and that's what we like to do.
Awesome, awesome. And yeah, I'll obviously include links for everything that we talked about, including the ITM website, the Beyond Gold and Silver website, which has a lot of educational information, and then both the YouTube channels, Lynette's personal Twitter account, so that you can follow her on Twitter and keep up to date with what she's sharing as far as financial noise. But as always, Lynette, I really appreciate your time. Before we wrap up, do you have any final thoughts or anything you'd like to add before we do close off today's conversation?
Well, I'm really happy to be here, Chris, and take more honey for your throat because this is all part of community.
Right.
And be nice to each other. My goodness, treat people the way you want to be treated. It's a much nicer world that way.
I 100% agree. And if it and if it wasn't for the fact that you're so busy, and I was to call up and say, "Hey, my throat's messed up," and the next time I would be able to talk to you would be in several months, and I really didn't want to miss a conversation, especially considering where we are today and what's been transpiring since our last conversation.
A
So,
lot.
and I really couldn't miss the conversation regardless. So,
If you were in
um,
Arizona, I'd give you some honey from my bees.
I keep saying I want to come to Arizona, and I do plan on coming. I've just got to figure out logistics and stuff, but I would like to do it really soon. So I will keep you up to date on that because there's lots of people that I've got to be making a little visit to out all in the same kind of area as well. So I will definitely be in touch with you about that. If you could bear with me real quick, I'm just going to wrap up the recording of the video.
Sure.
So, ladies and gentlemen, again, I really do appreciate you tuning in. I do encourage you to check out the playlist that I created that's linked below in the video description with all of the previous appearances with Lynette Zang on the channel. Check out her YouTube channel for ITM Trading and for Beyond Gold and Silver. Check out the links for the websites and for the Twitter account. They will be all below in the video description. If this is your first time watching any of my videos, be sure to check out and explore my channel. I'd encourage you to be subscribed, and I'll leave you with this. Be blessed, be the change, practice change.